Welcome to the Tow Club Industry Podcast. I'm pretty excited about our guest today. I'm happy to have Chip Thompson from ATIG, who is an insurance specialist for and in support of the towing industry. And we're really happy to have you, Chip.
It's a pleasure to be here, Art. I love to talk insurance and would love to kind of shed some light on kind of what's going on in the industry per se, because I think there's a lot of misconception out there right now. And I just want to get the information out there, hopefully to help the public.
Yeah, no, that's great. Before we get started, I got some questions for you. Would you mind just giving me a brief overview of what you do? I mean, obviously, I know you and I have a past relationship and a current relationship, but what exactly do you do in specific, to be specific, I should say, for the towing industry?
Sure. So I'm an independent insurance agent. You think of me as no different than, your local State Farm agent or Allstate, only I represent kind of exotic companies that specialize in high risk transportation. So if you want me to, handle your homeowner's insurance or personal auto, I'm not your guy per se. I always tell people that I can rarely understand my own policy, but I've been doing the towing niche for about 21, 22 years. It's a very specific niche. We've been doing it across country. We've also broken that down into a couple of subsets of repossession, which is kind of a subset of towing. And you and I both know that, even though you use the same equipment, the businesses couldn't be more different. And then, auto transporting. That's also a segment we handle along with maybe some auto repair. So I like to think of it as the life of the car. When it's sold, when it breaks down, when it's towed, when it's disposed of, when it's transported. Those are the things we specialize here in ATIG, and those are not common products. They are not common insurance coverages that your everyday run-of-the-mill insurance agent would have. So we would like to think that we're pretty specialized in what we do in that reference.
Right. That's very interesting, and I think it's important for viewers to understand. A tower cannot go down to his farmers or State Farm agent and get their operations insured. It generally doesn't work like that. And that brings me to my first question, which is, can you explain to our listeners what type of insurance do you sell to the towing industry in terms of garage keepers, workers' comp, the trucks, etc.? Can you break down what type of policies you're generally providing to our industry?
Absolutely. For the most part, we're looking at 4 or 5 main coverages that the towers usually rely on. First and foremost, we're looking at auto liability. And to break down auto liability, if you run over someone, run into their house, damage their car, bodily injury, that's usually the big part of the whole package. We have some stats showing anywhere from 85 to 89% of all claims across all towing programs, the life, they're all auto liability. And even more than that, they kind of break down into rear end collisions per se. That's where the dollars are. The rear ends, the neck, the back, the soft tissue damage. That is really what has made the premiums escalate under the auto liability category.
Okay.
Beside that, we're going to sell general liability. General liability is going to be if someone comes on your property, slips, falls, something happens to them there. Also, it's going to cover your roadside service, tire changes, lockouts, jump starts. Those aren't a lot of claims, but we have seen them. We've seen people change tires, forget to tighten the lug nuts, car goes down the road, tire comes off, kills a family. We've seen it. We've seen guys jumpstart cars and the battery short circuit. The car burns up right there on the spot. Lockouts, we've seen the same thing. We've seen guys try to jimmy the lock, shorts out the electrical circuit, the car bounces. So those are going to fall under your general liability category. 1, auto liability, 2, general liability. 3 is going to be your garage keepers. And it kind of says it in the title. You're keeping the car. You're in care, custody, and control of their car after hours, on the weekends, whatever it is. So we're going to call that the storage of towed vehicles, whether they're illegally parked, whether they've been damaged, in a wreck, anything like that, where you're storing a customer's vehicle. That would be your 3rd coverage. Your 4th is going to be on hook. And on hook comes from when all tow trucks used to look like they did 40 years ago, where there was an actual hook.
Right.
The car was literally on the hook when you were towing it, per se. There you go. And that's obviously bled over into flatbeds, into rollbacks, into things like that. That is covering the customer's car while it's in transit to a repair facility, back to your shop, things like that. Auto liability, general liability, garage keepers, on hook. A couple of ancillary coverages, work comp, difficult to get. Miscellaneous property for your computers and your tools and some things like that. But for the most
part, business property.
Correct. The big four are usually what's marketed out there in your preferred towing products, per se.
That's very interesting, Chip. Thanks for breaking that down. And another question I have, and I only ask this because, as you know, I'm a tower myself, and throughout my, I don't know, I can't believe it's been 22 years in the industry, but throughout my 22 years, you have experiences. You're with different insurance companies, different brokers, and you may or may not get the best advice if you are not being transparent with your agent. And I think you and I both know, towing is difficult, and sometimes towers get pigeonholed into things because of some requirement and so on and so forth. But I'll get to the meat of the question. Given your past experience, how often do you see towers underinsured and or sort of lacking coverage, and what areas do you typically see such things?
So one of the initial, I guess, statements one of my insurance mentors told me in the beginning was, how much insurance should I buy? And the response is, as much as you can afford. Now let's walk that back a little bit. I can make you insurance poor. I can sell you insurance and umbrellas and coverage until I literally break you. That being said, where's the happy medium? Where do you have enough coverage versus, I don't want to say too much coverage, but almost overinsured, where it's still affordable, you can still run your business? Your initial question would be, the majority of towers I see are underinsured, per se. That's just due to probably the litigation factor that's out there right now. You're in a high risk state. Your Californias, your Floridas, your Texas, your New Yorks. Those are big states for litigation. And what we generally see, I don't want to say it's a rule of thumb, but you see enough data, trends become trends. And what is a $30,000 claim in Kansas is a $100,000 claim in some of your big states.
Oh boy, you're preaching to the choir.
Yeah, and again, I'm speaking in generalities here. So you get around your higher litigation states, your more populated cities, you really start seeing that really climb up the amount of the claims. So now we're kind of back to, how much should I carry? Am I underinsured? It's hard for me to say one size fits all. Do you have property? These trucks are assets now. You and I know that the trucks are more expensive than they've ever been, and they're hard to replace. 3 or 4 years ago, you could wreck a truck and you can go buy a new one. Now you have to protect these trucks, with your life, type of thing. So you can't just, even if it's not your fault, you can't just run out and replace these things right now. So, workers' comp, umbrella coverages. I would love to see all of my guys carry this. The reality of the situation is there's usually not enough money to go around, and still have money left over when it's all said and done. So in the past, presently as well, do I see people want the bare bones of insurance? Yeah. A lot of questions I get are, well, AAA only wants me to carry this, or this vendor only wants me to carry this. Okay, I do understand that, and I'm happy to oblige, but what are your true risks? Right. If you do get in a, if you carry a $500,000,
what's your exposure?
There you go. That's a perfect one. If you get in a $500,000 claim and your limits are, exhausted, and you have a judgment against you for another $1 million, that's it. Everything you've worked for, could be flushed down the drain over, a few $1,000s.
Game over.
Game over. You start over again if you can. You try to dig your way out of it. But again, I'm not unsympathetic to the cost of doing business. Fuel,
Right.
tires, the price of these trucks are outrageous.
Yeah.
There's a finite amount of money to go around. So I would love to see my guys carry more insurance. We do encourage that. We do give alternate quotes. Hey, I know you have $500,000 for another $1,000,000. Is it worth it to you? And
Right.
from my side, if they say no, I will have them put that in writing, because I want to cover my bases as well.
Right, right. And obviously, given my past dealings with you, I can attest to the fact that I think your interest to give the best possible advice is mutual. I mean, if you're giving the best possible advice, it's because you want to protect your client in the unlikely event, which is what insurance is all about, isn't it? I mean, you're getting yourself covered for unlikely events. I did want to follow up to that question just real quick, Chip. In your experience, and I was a very small tower for a long time, probably for the first 15 years in business, roughly. Is it more likely that a small tower is going to experience under coverages? And I only ask this because there was a period of time where I was unable to get a really good policy. In other words, I was unable to get with somebody like you who could give me good advice, break down the policy. And if I remember correctly, I had to resort to getting kind of a crappy policy from a large insurance company that is no longer even playing in the towing space anymore. And I just remembered that, I signed with this company. And again, at the time, I'm a very small tower. I signed with this company, and then, I'm like, oh, I got insurance. I'm good to go. Well, then, you start growing your business, and, you contract with this company and that company, and they start asking for certificates of insurance and so on and so forth. And then, I'm reaching out to my big carrier, very large insurance company. I'm like, I need this. They're like, well, that costs extra, or we don't do that. And so I quickly learned, as the small tower in that moment, I quickly learned that, this is not good. I need to be with somebody that knows the industry. So again, I
A
mean, are you
specialist.
typically seeing small towers kind of experience these difficulties? Is that fair to say?
From where I sit, that's exactly how I see it. You start with the small contracts, maybe smaller motor clubs. You work your way up, and like you said, you get larger clients, you get a reputation. They ask for more coverage, which in turn, is more money, but hopefully you'll be compensated for it. So as the business usually grows, I do start to see them expand into ancillary lines of coverages. You and I talked about this,
Right.
EPLI for one. I can count out of 500 customers I have, I might have 5 EPLIs. And that is employment practices liability. Basically, what that boils down to is wrongful termination, sexual harassment, some things like that.
So it's kind of like a policy for your HR, right?
Yeah, that's exactly right. And they're not that expensive. 1,500, $2,000 a year for a medium-sized business. So you go back and look, and again, you just make the wrong misstep, tell the wrong joke, something like that. We live in a very litigious society,
Sensitive environment.
Yeah, and next thing you know, you're out, $75,000-$100,000 in HR and lawsuit cost, when this could all be handled, with right up front. And again, it comes back to, you almost need to be with a specialist, whether it's me, and there's 50 or 75 of us out there. You come back to, okay, well, you're an agent. You want to sell as many policies as you can. You're commission based.
Sure.
That would be a fair assessment. That being said, what we do is very niche. It's a very small territory we run in. So to try to, I don't want to say dishonestly, but to try to pass something off or oversell to a few customers, that gets out fast. If you're not acting in your insured's best interest, and if you're going to be in this niche business, that's the death blow. So treat your customers correctly, try to cover them, try to give them as many options as you can. There's only enough money to go around.
Right.
Educated choices, pick and choose where you want to deploy your capital.
Right.
And, we all go out and hopefully come back at night safe and with no claims, right?
And we can lay our head in peace knowing that we're insured. That thank you for breaking that down, Chip. It brings me to my next question, which is something that Man, I'm going to be upfront with you. I had about a half-hour conversation this morning with the tower surrounding this, but my question is, when I talk to towers a lot, one of the things that comes up all the time is difficulties in hiring drivers. And, I know I've spoken to you about this. And so given that you understand these difficulties, I should say, exist, what steps do you suggest towers take to ensure that their existing drivers and or prospective drivers that they're trying to hire don't spike or alter their insurance rates? Because this is something that, we've spoken with you and I many times in the past, and it's a constant topic of threads on social media, online. You want to hire a guy and so on and so forth. But I'd like to hear what your thoughts are on that.
Sure. So commercial auto in general, anything, over a 10,000 GVW, massive driver shortages nationwide. We see them online articles. We see news articles about them. There's a massive driver shortage in America for all things, whether it's trucking, towing, whatever it is. So now let's start breaking this down into subsets. Towing's very unique. Your insurance carriers want to dictate kind of, the parameters of your hiring, but let's face it. I mean, you're almost looking for a unicorn. Right. You want to looking for a guy with, 10 years experience with commercial this, the commercial that. Well, those are hard to find.
Correct.
And, if someone does walk into your shop, telling you what they can do, it's almost to the point of, well, what's wrong with you? Is there something wrong with your driving record?
And they're all the best.
Well, and there you go. So again, not only are you looking for a unicorn, but now you're having to kind of sift through, a stack of resumes. Ultimately, they're out there with $1 million weapon, driving around, and you have your business is in their hands at night. So you're competing with final mile delivery, which is Amazon, FedEx, people who deliver furniture. I mean, those guys are home at night. Your guys are out on a crowded interstate changing a tire. I mean, their life is literally on the line. So you would think that, theoretically, they could actually make more money. Well, you and I know that's not necessarily there. So now we're back to fighting over the same pool of drivers and maybe not even having the best conditions. Correct. So what do we do? What do we do in a driver shortage right now? I would come backwards a little bit. How can you make your company, I don't want to say driver proof, but put the parameters in place that allow you to keep the good drivers? Big thing we've seen the last 4 or 5 years, telematics, accident cameras. These are paramount. If your insurance carrier isn't requesting them, they're going to be. It's just going to be a tool that everyone's going to have. Now, when you hear that, you immediately think, well, I don't want people standing over the top of me telling me how my drivers can drive it up. From my side, we don't do that. There's not enough manpower to even monitor your account, much less 35,000 towing accounts out there. Sure. What we're looking for is, the hard braking, the hard going around the turns. We're trying to avoid rear end collisions because that's taken out every towing insurance program in the last 20 years, rear end collisions. And theoretically, rear end collisions are preventable. Distracted driving. Listen, I'm guilty. Distracted driving, going too fast, overloaded for conditions, stuff like that. Next thing you know, somebody stops short. Bang, it happens. The accident cameras are a godsend when it comes to litigation. Look, if we're guilty, we're guilty. We're going to pay either way. If we're not guilty and there's no camera, who's to say a jury is ever going to believe us? Because when they put someone on the stand, they're neck, back, they're hurt. It's your story against theirs. You're the big evil towing company. Right. They got their prejudices already against it. And it's not your money. That's not Art's money. It's Progressive's. Give them $500,000 type of thing. That's the mentality. Right. But when you have this stuff captured, when you know it's just a tap, and they have metrics to know, well, taps at the worst are only going to cost us, and again, I'm using generalities, $10,000. You're not going to break vertebrae. You're not going to do this. You're not going to do that with tap. So then you start seeing these $300,000 claims come down to $10,000 claims. So are they a little extra money? They are. And again, we've just talked about there's not enough money to go around, but this is almost asset protection at this point. Everyone is out for you, quite frankly.
Yeah, no, I agree, Chip. And you know, I did want to add to what you said. Our development team at Tow Club, for example, recently created an integration with a company called Azuga, which is a large provider of the cameras and the truck location devices, which measures the metrics that you brought up. You know, the camera, the hard braking, the hard stopping, and what I wanted to add was this technology is extremely inexpensive at this point. So
yes, and coming down.
You know, yes, there is a cost involved, but the juice is definitely worth the squeeze on that. You know, so you know, kind of a follow up, or not a follow up, but something else I did want to touch on. You know, again, when I talk to towers, you just kind of hit the nail on the head in describing sort of what the risk factors are, right? And how towers, you know, how they need to be vigilant and invest in software and invest in trackers and make sure the drivers are being safe. But one of the things oftentimes towers ask me, and of course this is sometimes born out of the absence of what you and I just talked about. In other words, what you and I just discussed is often not the topic, but there's always like the rhetorical question of, you know, hey, you know, my policy was $100,000 last year, and this year my guy says it's $180,000. And so I guess the question is, you know, everybody seems to take exception to the sudden spikes, and as opposed to like an incremental increase. So I'd like for you to maybe explain, you know, what is the cause of that spike? Is it claims? Is it a reduction of companies providing insurance for our sector of transportation, you know, towing? Is it both? You know, I'd like to hear what your thoughts are on that.
Yeah, I could probably drone on this for probably the next hour. So shut me up if I'm too long-winded, but I'll try to break it down into a few factors. So, you know, A, obviously it's claims, right? If we weren't having claims, then
that's the biggest.
That's the biggest thing.
Yeah.
B, claims lead to lack of carriers. You're in California, one of the big problem states. I mean, when you see Progressive, the largest writer of commercial insurance, leave a state, that's a problem. Now, why are they leaving the state? They can't get enough rate. And you go, how can you not get enough rate if you're charging, you know, all of this? And there's a lot of factors that go into that. But once you go from 15 carriers to 10 to 5 in a matter of 36 months, which is probably what California have seen, the 5 left are going to get their pound of flesh, because even if they're performing well, they've got their eye on and Progressive is a technology company, make no mistake about it. Going, if they're losing money, it's just a matter of time before we do. So they're trying to get out in front of it, per se. Now, a lot of people, well, you're capitalizing, you're gouging. Well, no, in 5 years, right? The biggest thing driving the rates is something called investor-funded litigation. A lot of people do not know what this is. Now, this popped up about 10 years ago, and again, I'll use generalities here. But basically, investment firms, private equity, groups of people have gotten together and pooled millions of dollars. And they've gone to people who have had claims in the past and had them reopen their claims. And you're using their network of doctors, you're using their network of surgeons, you're using their network of attorneys. And when this goes to trial, and an insurance carrier goes, hey, well, listen, you signed a release. I paid you $100,000. Yeah, but I'm still having huge back problem. I can't move. When that goes to trial, all they see is that person there who can't move and going, well, what, this evil tow truck company has just mowed this person down. You know, give them the next 400,000 and then give them another, 400,000 on top of that. Well, the insurance carrier has, and again, let's say that happened in 2016. And that's run their course. They settled the initial claim in the first year or two, and then they've opened it back up in year 3 or 4. So the insurance carrier is going, look, man, we closed our books in 2016 at a 90% loss ratio. Now we've got all of these claims that have popped up from previous years that we've closed out, we paid dividends on. Now you're telling me we're running 130% loss ratio? And at trial, you are not allowed to disclose these people are being funded. So when the lawsuit comes in, not only does the plaintiff get a little extra money, but the investors split the proceeds.
Wow.
So now you have bad actors. I'm not saying they all are, but now you have bad actors with limitless.
They certainly
pockets.
could be.
100%. And listen, the insurance carriers do not have the resources to go back and investigate every single one of these. No, honestly, it'll be a PR nightmare taking every one of these to trial. So a $100,000 claim that was settled and closed out, now 4 years later, is a $900,000 claim. So what you started seeing around about 4 or 5 years ago, where any insurance carriers that were in specialty transportation, dump trucks, tow trucks, anything like that, and they're all niches, just started pulling the plug in mass. They would go, look, if we knew what to charge, if it was double, we would charge double. But we don't even know what to charge now because it's taking 5, 6, 7 years for these things to close out. So they finally just went, you know what? We quit. We quit. Which is what you're seeing right now with Florida homeowners. Florida homeowners, the litigation was so bad. It's not the hurricanes that's driving up all of the homeowners' claims down there. It's, a claim comes in and it's a $30,000 roof with a $200,000 attorney bill attached to it. Well, why does an attorney need $200,000? So the insurance carriers for years and years kept sounding the alarm. And finally they went, we're done. We quit. You figure it out. And Florida has now scrambled in the last 12 months to pass litigation reform, tort reform, some things like that. The problem with what you and I do is we were on the front end of this 6 or 7 or 8 years ago. And until that gets solved, and it's almost a state by state issue, you just see carriers exiting these specialty lines. Trucking, they'll stay in trucking. There's 12 million trucking companies out there. You can make $1 there.
It's a large market.
When they see a repo class or a towing class or a dump truck or a cement hauling, where they know the big GVWs, heavy claims, heavy payouts, and they can't get their hands around it. And they're going, look, it's not our job to clean your industry up. We're not here to save the manatees in the rainforest. They're insured. They're here to make $1. But they're going, you guys won't even clean up your own industry. So if you're not going to clean up your own industry, why would we be involved? So then you start having carriers leave. First 1, then 2, then 3, and then it spreads. And I think we've seen the worst of this because I am now starting to see a segment of towers separating themselves from the field. Like you said, telematics, cameras, good driving habits, good solid contracts, not adding a truck every 2 or 3 months just because the work, good solid sustained growth. You're starting to see a segment in about the last 2 years nationwide kind of pull away from the quintessential stereotype tower type of thing. And those are going to be the ones that are going to make it. The other ones, they're ultimately just going to price them out. The price of gas, the price of fuel, the price of trucks, the price of insurance is literally going to just price them out.
Yeah, no, thank you for explaining that, Chip, because has been my observation as well surrounding the industry. In other words, sure, the small tower can survive and likely, and hopefully I should say, will continue to survive by adopting technology that has come down in price a lot. But certainly, towers do have to make a decision as to, if we all know as an industry, the towing industry, I should say, and I can't speak for the entire industry, but if we do know that insurance is a significant expense for us, in other words, it's a significant portion of our outgoing operational costs.
Yes.
So knowing that, I think you're right. I think the towers that are unwilling or unlikely to understand the fact that they have to use some of their resources on risk mitigation, reducing claims. And one thing, just kind of a follow-up to what you brought up, I did want to ask, I was going to ask about the mitigation stuff, but we kind of touched on that already. I did want to ask though, and I'll just attest to my own personal policy as a tower. What factor do claims play in the renewal process? In other words, let's say I'm coming up for renewal and I had a couple claims. Now, in my experience, as you know, and a lot of towers I talk to do something similar, we don't make a claim unless it's some catastrophic thing. So I believe, and I'm just using this as seat of the pants kind of assessment, but I believe we had two minor claims last year that we did report to our insurance company, but we paid the claims. We wanted to benefit from the adjuster's capability that the insurance company would possess, so they could kind of flex their muscle because they know how to handle a claim. They know what the obligations are. So I had good success doing that. But what factor does that play in the renewal, I should say? In other words, should towers be saying, listen, man, we're only going to claim large stuff. We're going to take care of the small stuff. What do you, I know you don't want to tell people to part with their money, but what is your thought?
Well, a bigger thing, I don't want people to lose their business at this point. So now we come back to, what am I supposed to say versus what's the reality out there?
Sure.
Me and my business partner, we talk about this a lot. What is the true cost of insurance? If you're paying $100,000 a year, how much extra are you fixing out of pocket? Another 10, another 25 for scrapes, for what we're going to call just the price of doing business. I didn't do this.
Correct.
But I will. So
I just settled it.
Yeah, exactly. I was leading down this path. I'm glad you brought this up. So from what I've seen from the insurance carrier side, an insurance carrier would rather see one $50,000 claim versus five $4,000 claims. Now, I do understand the math there. I get it. One's bigger than the other. Where I'm going with this is, if you're turning in claims, small ones, and you would be surprised how many people turn in tic-tac stuff. Well, it's my insurance, let them handle it. When you're constantly turning in things, the insurance carriers look at it as a frequency issue. You're running into something all the time, and it's just a matter of time before the big one hits. That's how they view it. So they would much rather see one pop, even if it's a fatality, a catastrophic type of thing. They have actuaries, they have planned for that. They know they're going to get, if they're going to write $50 million worth of towing a year, they're going to have 4 to 5 $1 million claims. Again, those are arbitrary numbers, but they know that. They know that's going to happen. Where they can't pin down is if you're running into something all the time. Now it becomes, now you're dragging down the claims department all the time. Now it's something, and a lot of people, they don't want to fool with it. And this is where I would say, please become your own advocate. Just like in health insurance, just don't show up at the hospital and just take whatever they're saying, at face value. Be your own advocate. Again, if you need to use the claims department to settle a rough claimant, hey guys, can you please just stand behind me and adjust this? This guy's trying to extort me. I'll pay for it on the other side.
Exactly.
Just open communication with your agent, with your claims adjuster, with things like that goes a phenomenal way to these underwriters renewing, non-renewing, things like that. Because let's face it, I mean, they do not, they do not want to see frequency. That ultimately, and again, sitting from my side, you'd be shocked at how true that is.
Yeah, thank you for that, Chip, because again, these are the concerns that towers share with me, and I'm very active online, so I read a lot of the threads and look at the social media posts, and again, and I've said this before, I mean, social media doesn't tell the whole story because oftentimes there's missing context and so on. But these are some of the things towers talk about. It does bring me to my last question. Given my past poor experiences with other avenues of getting insurance, I would like to know, just so our towers understand, and just so I can attest a little bit to my experience with you, I was having difficulty getting a good policy. and you came and to be honest, you asked me a lot of questions that I just wasn't getting asked by other people that I was trying to work with. And so given that, I'd like to know, how you overcame sort of my difficult situation and what sets you apart from the other agents, because I'm sure listeners will look, and listen to what we're discussing and saying, I had to give this guy a shot, but I would like to know, what sets you apart. In other words, is there something structurally about the carrier that you represent or your relationship with them that has helped you overcome some obstacles for towers like me, who you have helped?
Sure, and it's a great question. So I represent multiple carriers, and it can depend. Some carriers like some states, some don't. Some like a nice mix of trucking, some don't. Some like auto repairs, some don't. So it kind of comes back down to what we were talking about in the beginning. I would advocate that most people probably need to deal with someone who specializes in this type of thing, and that might not be your local agent. It might not be your brother-in-law type of thing, but this is kind of where this separates the savvy buyer from, maybe having a bad experience. The people who dabble in this part-time do not have access to the good towing carriers. The good towing carriers, they want to deal with specialists as well on the insurance side, because we should know what questions to be asking. We're their front line of defense. That being said, I'm also your advocate as well. I need to know about private property towing. I need to know if you're dabbling in repo. I need to know all of these things up front, because that would make a difference where I would shop you, quite frankly.
Right.
Some carriers will want some things, some will not. So this is pretty readily available online. There are specialists, pretty much in any region, and I would use the West Coast, the Midwest, Texas, the Southeast. There's several of us out there. Now, I will also go to say there's only so many insurance carriers. So you may call 10 different agents and every one of them tell you they have something completely different. Most likely they do not, because we're all using the same 4 or 5 choke points per se. So find a couple that are reputable. And again, talk to your competitors, talk to your friends in the industry. Small industry, word of mouth goes a long way. And it doesn't hurt to shop this every year or two. At least keep your current carrier honest, at least for peace of mind per se. But for the most part right now, it's fairly stagnant when it comes to pricing. There are 2 or 3 main players in your bigger areas, and they're within reason of each other. You get in middle America, you'll find an insurance carrier that only does a state or 2 that might do a tow truck. I mean, it's obviously easier to buy insurance in Arkansas and Missouri than it is in South Florida or Los Angeles per se. So again, I would say, for the most part, do a little homework, seek out a specialist in this industry, one that can advocate for you across multiple carriers, and just protect your business. Insurance has one of those things that used to be, you could kind of float, you could shop it and pit one against the other. Right now, right, it is a hard fixed cost right now. And I would recommend anyone guard their policy with their life. Right. Again, if you have to use it, you have to use it. That's what it's right. There. Right. Catastrophic type of things. But for the most part, I mean, this is the difference between staying in business and not staying in business. Probably the next 3 to 5 years too. We're pretty informed about what's coming, who's trying to put something together, who's dabbling in the towing insurance market. There's not a lot out there right now.
Yeah, as I've discovered, and I appreciate the explanation, Chip. And I just wanted to add, it sounds to me like really what you're telling my fellow towers is, I ask these questions because these are variables that can affect your policy, and that certainly was the case for me. I think that my specific use case in the towing industry is something that, I only do private property towing, for example, and I think a lot of agents out there, they just kind of lumped us in with others, and there wasn't a lot of questions asked. So I certainly appreciate the way you broke that down. I really appreciate, we're getting pressed for time here. I really appreciate you coming on I hope that, you know, to my audience, I hope that our conversation shed some light on something that a lot of people are very concerned with is, you know, the cost to insure their business. And, you know, thanks again, man. Really, really appreciate it.
You know, not only do I consider you one of my best insureds, I consider you a personal friend as well. So
Thanks, Jim.
I'm so happy with all your success across all your platforms.
Thanks.
If there's anything I can ever do for you or anyone, I love to talk about this stuff. It's my life. I've turned into an insurance geek. I don't know how it happened, but it did. And you know, this is the niche I've been doing a long time. So happy to talk, happy to help in any way, shape, or form with you or anyone.
Thank you. And I do want to let all of our listeners know that, you know, you can contact Chip. All of his information will be in the video description. And, you know, one more thing for the audience, you know, if you aren't willing to know, please don't tow. Thanks again.
Nice. Hey, thank you very much for having me, Art.
I appreciate it, Chip.
Continued
Thanks.
success. Thank you.
All right. Take care.